All right, good morning, gang. August 26th in the tradingology.com trading room. We'll get the doors opened up here. Dave was the early bird, so he's already in. Good morning, Dave.
I could have joined. Yeah, good morning. I could have joined the 6:30 this morning. I got up a little bit late this morning.
You got up a little bit late. It was 6:30.
Slept in. Morning, Kyle. Morning, Andre.
Get my chat box open here so I can see you guys.
I have my jeans shirt on today because it's actually chilly here today.
Well,
It's been in the 80s and 90s, but now it just like dropped down to the 50s.
yeah, we're in like the 90s all weekend. 100 heat indexes today.
Oh, wow.
Yeah, it's gross around here. Stay inside in the air conditioning. I'm hiding.
Oh, no, it's going to be good. I mean, later today it's going to be in the 70s, but right now it's cold.
This weekend they're looking at 79 for a high on Saturday, so it's going to be a nice welcome change.
Oh, yeah, that's good.
So another morning of the markets and not a lot of activity in the internals we see. Then they're starting to turn more negative at this moment. Good morning, Andre. Good to see you. Look at the volumes, just hugging the zero line. Doesn't know what to do.
Yeah, no stair stepping there.
I have a feeling, let me pull up my calendar quick here, because it's full of what we were starting to talk about yesterday.
Oh, we had oil. We had oil this morning, didn't we? And oil's
reporting right now.
Yeah, so it's up a little bit. Let's see what it does. Let's see if it goes crazy.
Depression, it just got a green negative 4.7. So they're happy because it beat the forecast. I don't understand the oil. We need to have Josh in here. Admit everybody. There we go.
Yeah, I mean, I tried to follow oil for a while, and sometimes if the supply is up, it means there's too much supply. As the prices decline, but it really depends on the refiners. Where where's the stockpile? Where's the supply at? Is it at the refiners? Is it is it at the pump? Is there not enough supply coming in? I don't know. There's too many factors for me to wrap around to kind of figure out that market. I never really paid attention to it too much.
Yeah, if the actual is less than the forecast, it's good for currency. At least they call it currency here, not money.
Yes, yes.
Mike would be happy.
Mike would be very happy about that.
So yeah, so we were lower than that, so it's a green number. So I guess that's the simple and easy way to read that crude oil inventory, is it's a good thing. But what I was alluding to is not specifically crude, but look at tomorrow. Fed speaks, Jackson Hole. Who knows what they're going to come out with?
Well, the word is that he's going to come out about pumping inflation.
Yeah, exactly.
He wants more inflation. What's he going to do to pump inflation?
And isn't it just a fantastic statement to tell the general public that are hurting that we need to raise your cost of living because it's good for you?
That's a tough sell, isn't it? Especially when people are not, like, there's millions of people unemployed. Tens of millions.
Another million every week is reporting their new unemployment, but we're going to raise the cost of living on you.
Yeah, hey, don't worry, guys. We got the economy solved. You just keep paying more. That's all. Yeah.
I was thinking about this last night, too. I'm going to come out and say, when are they going to rename it from the stock market to the Fed market?
That's a good one.
Instead, you get the farmer's market on Thursdays. You get the Fed market every day that you want.
Ah.
You can come in and buy your stuff from the Fed, or maybe they'll sell it to you.
That's right.
We're getting closer and closer to that, so we'll see. Absolutely. I saw another good one too from Danielle. I hadn't seen her videos recently, but instead of being the S&P 500, we might as well just start calling it the S&P 5, because everything's based on those top 5.
Yeah, the top 5 stocks are like, I don't know, it's huge though. It's a big portion of the S&P 500 for sure.
And here we all hitting bubble highs on the ES and the NQ as we speak.
Yeah, I think that everybody says, I heard this guy yesterday in a commentary saying that the stock market is a forward-looking instrument. So it's really projecting what the economy is going to look like a year from now. Okay, well, I mean, hopefully that's good news. What do you think?
Well, so a year from now, if we take that theory and we look at what happened in the last quarter, 2 quarters, is that what we expect to happen again? If it's a year outlook, do we expect another roller coaster in a year? So if we look back a year from now, can you make those correlations? That's what I would ask that gentleman.
So, well, Esther Pierce came out and the Fed, I think it was Esther, no, not Esther Pierce. What was her name? One of the Fed governors. In fact, I tweeted it. I forgot her name now, but she came out and said there's going to be a double dip. Well done.
Yeah.
Well
I haven't heard that one yet. Interesting.
Well done. Yeah. So what we'll do is we'll probably see that double dip around maybe the beginning of next year, the end of this year, just like we had a dip in March. If we do get that double dip, and then we're on our way to 40,000.
I was looking at the long one. Let me switch this guy over to like a day chart and I'll pull up a year. Check this out. You guys have probably seen this. But if you're not looking at it on a long-term basis, it's easy to miss. So there we're going all the way back, right? This is 2018. There's our high. This is on the Dow, so we're getting close. So she's talking we might have another dip down and make a really big W. They talk about the letters, right? Is it going to be a V? Is it going to be a K? Is it going to be a W? Maybe it'll be a massive W.
Well, if you connect those, that's something I haven't done in a while. I'm glad you brought this up because, it's good to look at those long-term charts every once in a while. If you take that upper trend line there that you have and extend it all the way to the top from the left point, yep, all the way up there, that's probably a pretty good target for the next Dow. What's that, 33?
Yeah, right in this neighborhood be just 30, 31, depending on how long it takes to get there.
Yeah, okay. So, maybe by the time it gets there, maybe around the election time, the president can come out and say, hey, we're at all-time new highs on the Dow.
Or this guy comes down here now.
Yeah, who knows? Oh, it's a broad top formation now. See, now you're being a technical analyst.
We hit that and come all the way down to 16.
That broadening top formation you just created there is the exact same broadening top formation that I put on my charts in the 2008, 2009 financial crisis. Exactly the same. And that scenario seems to be playing out again. Yep, there it is. You had the same.
It's 11.
And the broadening top formation, amazingly, never works. It hasn't worked yet.
Yeah, so there's where it was started there, and that's where it dropped down to. Because this is 05, 06, 07, and then it fell apart in 08.
Yeah, well, I mean,
I'd have to redraw them.
Yeah, you'd have to redraw them, but it's exactly the same thing. Exactly the same thing. So, yeah. I don't know. This dip was a little, I don't know. Was this dip deeper than 2008, 2009? 2008, 2009 was about 50%. This was what, 30%?
Yep.
Yeah. There you go. That's a good view right there.
Pay no attention to this. That's not for dailies.
Yeah, no.
Just move the noise out of the way. Yeah, interesting. There we have. So that quadrants are still on there. I just don't have a 25 in there.
Yeah, now we're above the 75. I mean, it kind of hit there, backed off the 75% level, and then it just kind of hung around. And once it closed above that, and made a pretty good run up. 50% held pretty well. Never really got down to that 50%, but that quadrant between 50 and 75 held pretty well.
Yep. So that 100 is right around the 30,000 level from that previous high.
Yes. Yes. So yeah, I think we'll break through that. We'll go up to that upper trend line, maybe bounce around for a few months. It's nothing. This market is nothing like the 70s, 80s, and 90s, even the early 2000s. It's just amazing. Just amazing.
So there you have it. So that's my feeling. It's going to be a lot of mix and match, what's the word I'm always looking for? Just chop with the Fed stuff happening. Whenever there's an FOMC announcement, we seem that the trends, it seems to just mellow out a little bit because they're waiting to see what he's going to say. This is probably the most I've seen with discussion on before the meeting, where he's talking about, this is going to be epic, blah, 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 where they're piping it all up already ahead of time. So that's a little bit unusual, I think, but.
I think so. He's really hard selling, I think, at this point. He's hard selling the inflation scenario. Now, the question is, what actions are they going to take, or what are they going to signal? Because they just signal the market to tell them what they're going to do, but they haven't done anything yet, just to see what the reaction is, right?
Right.
That's the moral hazard.
Yeah, that's like we've talked about over the months and years is, yeah, they try to manipulate it, and like exactly as you say, this is what we're going to do. Then the market kind of responds with when they had more points in the interest rate to play with. It's not actually like they can't actually literally affect it. They hope what they say affects it the way they say it.
Right.
So it's their false sense of control that they have.
Exactly. And the only control they really do have is to buy every asset in the world.
Right. That's how it becomes the Fed market.
Yeah.
And then they do control it.
And then they do control it. Yes. Yes.
And I don't like where that leads.
Generation after generation, your kids, my kids, everybody's kids are going to be paying the Fed for futures. I mean, many, many generations in the future.
Yeah, I hear, people talk about, well, they'll just cancel the debt and start over and this and that. It's like, well, how do you do that? Because that'll still break.
No, see, canceling the debt is deflationary.
Yeah, and that's the opposite of what they want to do.
That's the opposite of what they want to do. That's right. So all the YouTubers out there who are calling for a debt jubilee, and barking up the wrong tree. The Fed wants inflation, not deflation, and canceling debt is deflationary.
Do we think, or do you think it's any way that it might be because they've lost we're at the zero bound? Doesn't look like they're going to go negative. Even though we've talked about it a number of times, we haven't seen them do that. Maybe that'll be some weird announcement, but they want to go the other way. So I don't see it going to negative rates, but do you think it's just, they want to build in this inflation so they have more room again, so they can drop it again because they see troubles again and they don't want to go negative? There's that side of it too.
Well, they're on a very fine line here between negative and positive, because they're right at that zero line. And the more they print, and the lower the dollar goes, if the dollar continues to sink lower and lower and lower, they're going to have to take it negative at some point. The problem is, like we said, they're going to overshoot this thing. They're going to print so much money that at some point it's going to catch fire. Like a small brush fire turns into a raging forest, right? Fire. Right. So they're really playing a very fine line here, and they're playing a very dangerous game, I think. They are not going to be able to take their foot off the gas of printing money before it's too late and they get that inflation scenario they want anymore. But here's the problem with that, is that the more they print, they can keep interest rates low. They also made, I don't know if you caught this on the last statement, they no longer have no longer have any reserves.
Yeah.
So
They're not required.
Well, not required, but on their sheets, they have no reserve balance. There's no balance reserves.
Oh,
The banks have any reserves with them at all. They repatriated all those reserves back to the major, the primary banks.
wow.
That's why we haven't seen any financial collapse of any of the banks. They've got trillions of dollars on their balance sheets. The Fed's not holding it. The Fed's collecting the interest on the debt. The interest on the debt alone has got to be in the billions of dollars that they're collecting.
That makes sense because I did pull up that failed bank list again, and there wasn't any new ones. I've been still keeping an eye on that once a week.
Yeah, all those reserve assets that the banks had to pledge to the Fed have been repatriated all back to the banks. They said they don't have anything on their balance sheet. The Fed says they don't have it. So this is an interesting scenario. If we do get inflation, interest rates have to go up because, well, let me put it this way. If we get inflation, commodity prices are going to rise. It's also going to make the dollar more valuable. They want to stop the rise of the dollar. That's the thing that scares them the most. And interest rates rising scares them the most because all of the bond holdings they have are going to drop in value. So they have to continue to print in order to keep those interest rates low. Being the reserve currency, though, I think is the only reason why they have not gone negative.
I can see that. And the trick there is just how long is that actually going to hold true?
Yeah. Yeah, because at some point, if they print too much, they're going to have to go negative. Let's take a look at that the yield curve again. Because at some point, they said they were going to, they are controlling the yield curve now, not just the short-term rates, but the yield curve.
Yeah, let me pull it back up here.
Yeah, so since the beginning of August, the 30-year has actually gone up a little bit.
Just slightly. It had a little, it went up and it's coming back down now. Actually, it was at 145 as a high.
Yeah, so now it looks like they can control the entire yield curve. But look at the spread between the 2, 3, 6, 1 year, the 10's at 0.69.
Yeah.
I mean, there's like nothing in between there.
1 cent from a 2 to a 3 month, and then up here 3 cents.
Yeah. Yeah, that's pretty crazy.
I'm still waiting for the 50 to show up or the 100.
Yeah.
That's nowhere near outside of the realm of possibility for them. I absolutely expect that.
Yeah, that is very possible. Look at the 20 though. The 20 has actually gone up month to date, 8 basis points or 7 basis points. And the 30 is up 16 basis points. So.
Yeah, I think I saw some right along this month that at one point there was mortgage rates in the 2s, like high 2%. It's like, wow.
Yeah, wow.
And how do you think today's society would react to yes, Mr. Customer, you can get a mortgage. Your rate is 15%.
There goes the housing market. Now all of a sudden you can't buy a house anymore. I mean,
it's the 70s again, and
oof.
Interest rates are back up to that. Can you imagine a society trying to swallow that?
Wow. Well, I mean, I really, really feel sorry for anybody my age and older that doesn't have any assets because, I mean, their savings is just being decimated.
And there's no time left to recoup for it. That's always the advantage of when you're young, you have time. Yes, it'll recover in time. Not anymore. Time's running out.
Yeah, that's true. Like my son yesterday and I were talking about blockchain and cryptocurrencies. And I said, yeah, that's great. I said, you got 5 to 10 years to wait. I don't. So, come on, let's move it.
Oh, you're not going anywhere, Dave. We're not going to let you.
By the way, I've been doing a lot more research into the VeChain and Sunny Liu. That guy is sharp as a tack. Man, that guy is not only does he have really good business sense, but he's also a tech guy, and he's very, very sharp. I actually listened to one of his interviews in Chinese, of course with subtitles,
I was going to say, if you can speak Chinese now, that's awesome.
English subtitles. But he is one smart guy, and it's becoming as much of a favorite of mine as XRP.
Interesting.
I think two best worst case scenarios is XRP and VET. Now VET might even have a little bit of an edge over XRP in this respect. He did an interview in this Chinese interview and said that the low-hanging fruit in the blockchain space is really supply chain management. And he said what they're planning on doing, and this was done in January of 2020, so it's relatively recently. He said their plan is to get into the supply chain management, right from producer all the way to consumer. So he's going to cover the entire supply chain. He said that's a low-hanging fruit in the blockchain industry. Then we get into payments. He said he sees a lot of blockchains trying to tackle the payment issues before they have a solid underpinning of the supply chain, because that's where most of the payments take place, along the supply chain.
Interesting.
Yeah, that was very insightful, I thought.
And the other advantage it has is it's less than 2 cents.
Yeah. Yeah, my son thinks it's going to be similar to what happened with XRP back in 2017. In March of 2017, XRP was a half a cent, and it went to about 30 cents, and then it went up to $3. He said something similar could happen to, I mean, it's total speculation.
Right, obviously. But
I kind of see the same chart pattern if you put them side by side, XRP sure. 2017 and so I bought some more of that yesterday when it dipped down to like 164.
I might have to take another scoop in there because I do have some of that as well. If it's good for some, it might be good for more.
Never know.
As we say, not financial advice. Do your research.
Research.
How it works for us.
Sunny Liu also gave a number of speeches at Draper University, and I watched those on YouTube. Look them up if you're interested. They're very, very good.
I just found them, so I'll check that out later. Nice, cool. All right. That's no, VET is not at that high. Your decimal point's in the wrong spot, Andre. Move it over. Move it over 2 dots. 0.0172.
Well, he says 1.7 cents. So, I mean, I guess it is 1.7 cents, but it's if you're.
Oh, I see. Gotcha. Yes.
Yeah,
All right, I was reading it wrong. That is correct, Andre. You got it. You got it.
So yeah, so VET is almost as large as my XRP holdings now. Very, very interesting. Very interesting use cases. I think I don't know. We shall see. All of this space is entirely like. In fact, one in the Draper University presentation that he did, he looked at the growth of the internet back from 1994 through 2000, and he said blockchain is really like the internet in 1997. So he said he goes, it might even be 1995. We're really still very, very early here.
Sure, exactly. And like how this started is, it's all about if you have the time, this is a no-brainer investment. Anything in cryptocurrency is going to move.
Yeah.
Obviously, don't buy all 1,000 of them or 3,000 or however many coins there are now, but do the research on the top ones, and then the ones that make sense. That's where you can make a smart investment.
Yeah, I would keep track of the top 100 and just kind of see which ones are moving up, and which ones have really good volume, and which ones have actual use cases. Because the ones with utility and use cases are probably going to do the best.
Well, and especially when you start talking about supply chain, and if there is a change in the world reserve currency, whoever is controlling whatever digital currency is in that supply chain is a global thing.
Yeah,
That's absolutely an interesting discussion.
absolutely. All right, guys, we got a couple minutes left. Anybody have any questions? Looks like the market's just going to kind of trend sideways here until we hear from Powell. Yeah, Powell's going to move the market. I wouldn't be surprised.
Yeah, we'll see what he comes out with tomorrow. Probably just be sitting on the sidelines, have our weekly trades on, and respond as required.
Yep, I got my Nadex trades on this morning, sold them up at the top. One of the things about the Nadex trades is that what I'm really doing is trading the negative space. And what I mean by that is the far out of the money, either selling the contracts. And when I'm selling the contracts out of the money at like a 17 or 20 delta, I'm really saying, okay, well, it can stay where it is, or it can even go up a little bit. I'll still make money, or it can go down. So there's really three scenarios I can make money: stay the same, go up a little bit, or go down. So you have I look at it like a 75% chance of profit. VXX today, Dan and I looked over everything with Powell talking, and you can bring up the chart if you want of the VXX. Maybe we'll kind of go over that real quick. It's right down at the bottom of the Darvis box. There seems to be a little bit of support around that 23.80, 24 level. Everything looks good for a short trade, but Dan and I both noticed that the call premium at the 30-day options were higher this morning when it opened. And so maybe there's a little bit bidding up with call options. Large traders are thinking about taking a long position in the VXX. So we'll see. We'll see. I'm not going to enter into it until later today. And I can always post something in the RTUS when I do.
And as a test, I do have one on today that I entered this morning. So we're going to test and see just the different market variables. We're always testing for you guys. So even me and Dave are testing. So Dave's going to wait a little bit. I'm in on mine. I'm currently up about $20 on it for the day so far.
And you went short?
I went short.
So 92% of the time you're going to be short the trade anyway. So you can't go wrong, right? Going short. So.
And we did notice we zoomed in this morning, and this Darvis box was actually up here. So this has moved down just in an hour.
Yeah, we may see it continue to move down. We'll see.
We'll see.
Premiums are still pretty good, though. At the call money options on the VXX are over $2, which is pretty good. Remember, I don't really think about a long position seriously. I mean, a big long position until they're under $1 at the money.
That's what I was thinking, too, is we didn't hit that dollar premium level, so there's not as much wiggle room as, there's less meat on the bone, but there's still some dinner to be had. We can still share. So with that, I think we'll close her out for the day, and we'll look for you guys tomorrow. As always, hit us up on email if you got any questions.
You just made me hungry.
Go get yourself some steak.
Yes.
Take it easy, everyone. Good to see you.
All right, guys. Have a great day. See you again.
Bye-bye.